Well, for a greater outlook on the global equities at the moment, how the markets finished on Friday and what to watch for markets this week, I caught up with Peter McGuire from XM.
Everyone's been saying is it got the potential to hit 5,000 by Christmas, or by New Year's Eve. I don't know if it has, but I think 4,900 it's an achievable target, and it's just been so strongly bid up, Andrew. And last week didn't underwhelm. I think it overwhelmed as far as what Fed Chair Powell and the overall momentum. So yeah, US dollars come under pressure, and equities have had a nice little rally to the upside.
Yeah, what are you seeing locally? Obviously, we're seeing that rally continue strongly in the States. And of course, we've spoken about this before, the Australian market having underperformed relative to what we've seen on Wall Street. Where are you seeing locally the market at the moment?
I think it'll probably continue an uptick, Andrew. I think, the rising tide will lift all boats. I mean, there's been some performers this year, or star performers, that are extremely strong. Australia hasn't been one of them, but, I think that the overall momentum to the upside till the end of the year will continue, and it'll probably put on another 100, 150 points possibly, and I think that's where it'll probably end. But it's there's plenty of volatility trading the Aussie market, and if you're a day trader or you trade on short term, then it's never short of surprises.
Pete, let's go to that daily performance chart, which we always start with just to see those winners and losers. What are the standouts here?
Well, I think that Aussie dollar, Andrew, has been very strong. It's now at 67 cents. So think of where it has over the last 6 weeks. It's, showtime. The dollar index has come under pressure to the downside, US dollar. Crude's had a little bit of a rally after 7 weeks of continual drops. That's a storyline all of itself. And the New Zealand dollar, naturally. Gold all over the shop. But, you can't take your focus away as far as central bank buying. Extraordinary. And the British pound has performed quite well. And then you're looking at euro, yen down the bottom. Well, plenty of volatility there with euro versus this very strong yen.
Now, Pete, of course, the change last week was the Fed pivot as such, being perceived as much more dovish, led to what's been termed as the pivot party. And that did see, obviously, treasuries and equities rally at the same time. Interestingly, though, we had a couple of Fed speakers out on Friday too, just trying to be a little more subdued as to what the expectations are for those rate cuts that are coming. What was your take out there, particularly, I guess, where we are with the Fed funds rate?
Well, exactly, Andrew. Where does it end? And, they're saying 4.6 by the end of next year will be around where it sits. But it was 5.1 projected in September. You're looking at about 150 basis points of cuts over the calendar year of 24 when we see blast off, possibly May. So it's going to be that, a retraction, and that naturally would be normally a good sign for equities. And it's going to cause a fair bit of trouble, I think, for US dollar. That'll probably soften further, and it'll be a great year as far as currency trading. And you've got an election to cap it off with, a circus at the end of the year.
All right, so let's then focus on commodities. Oil, having been under pressure, of course.
Yeah.
What are you looking at next year, given overall forecasts for lower demand? But we had the International Energy Agency out actually lifting its forecasts.
Yeah, I used to go to Paris on the way to Vienna to the OPEC meetings. I'd sit with the IEA over their offices, and you'd get a really good holistic view as far as what's going on internationally. And as far as I think the situation, there are so many moving parts. You've got shale production at nearly record highs in the States, running at around about 13.3 million barrels a day. You've got also Venezuela and Guyana, that hotspot there that's going to be fascinating how that plays out. And then OPEC Plus trying to support prices. So I think that it's going to be a very tricky year for crude and how it performs. Really, Andrew, you've still got an uptick as far as demand, and maybe it's not as bullish as what the forecasts are for 24, but they can get it wrong by, 500,000 to 1 million barrels as well with just overall consumption patterns. And if you're looking at the long picture moving out to 2040, 2045, we're looking at about 117 million barrels a day. I was at a presentation by OPEC's Secretary General in Fujairah 2 months ago, and that was really a wake-up call.
All right, more broadly, let's take a look at some of those key commodities. Copper has been on the rise of late. How are you viewing that at the moment, Pete?
Well, China imports roughly 60% of the global copper demand, Andrew. It's running at about 8,500 a metric tonne at the moment. So it's had a nice little rally to the upside, sitting there at about 85.50. And there's the first part of it. So I think that will continue. But the standout has naturally been iron ore. Since around about August, it's been absolutely on fire, and that chart really demonstrates that. But copper's been a nice one, and we can't take our eyes away from it. So where we're looking at the picture at the moment, I think that will continue, certainly leading up with good strategic buying from China till Lunar New Year, and then we'll have to see how that performs in February.
Well, iron ore, in fact, sitting at around $134 a tonne, and has defied all expectations this year, hasn't it, Pete?
Oh, yeah, it's been extraordinary. Look, it's been choppy, Andrew. It was really sold off strongly, in that mid-year, and people were scratching their heads. But China, as far as stimulus, they really kicked the tin a little bit, and that in turn has increased, the demand picture for iron ore. So all the miners are very, very happy. And that's really, I think, hit it strongly to, that, as you said, nearly 135 a metric tonne. I'm reading a book at the moment, Andrew. I've read it 10 times probably, but it's a wonderful book, Hot Commodities, by no doubt probably the guru of commodities, Jim Rogers. I pulled it out of the library and my library, and it's 20 years old, but it just tells a picture for anyone wanting to appreciate the global picture. Jim really is a standout author and wonderful storyteller, and that story of commodities is not waning at all.
All right, well, there's some holiday reading right there for us. Thanks, yeah. Pete. All right, now you've also, as you mentioned, you do have a focus on gold at the moment, particularly given where it's moved, and a lot of this, of course, fueled by the Fed rate cut expectations.
Well, exactly, Andrew. That's the first side of it, and then you've got naturally the huge buying from central banks. They increased bullion reserves by 337 tonnes in Q3, resulting in net 800 tonnes of gold during the first 3 quarters of the year, and that constitutes a record. So it's just extraordinary, the buying. And as we've said, 24, I think, will be a very strong year for bullion, and 25. So, there's no doubt that strong demand picture as far as jewellery consumption and central banks is going to underpin price, and I think the best is ahead of it. That's, what we've seen in the last couple of weeks has been extraordinary, hasn't it?
It has indeed. Yeah, in fact, let's just take a look at that chart where you take a look at gold, and we, got that inverse correlation with the US dollar too, of course.
Well, exactly. That US dollar's come under big pressure to the downside, and then the other side, of course, is, gold's had a rally. So, yeah, that's really nice, and that's the whole story at the moment. Big moves and big blowouts as far as price, and it's been very, very strong.
All right, and let's round it out chart-wise at least with what we're seeing in the crypto space, Pete. And goodness gracious, once again, it's off this year, isn't it? Certainly, Bitcoin has outperformed most other risk assets.
Absolutely, Andrew. It's now sitting just under 42,000 for a Bitcoin, up from, as you know, 15, 16,000. So yeah, everything else has been dwarfed compared to what we've seen as, from Bitcoin and its performance. So is 24 going to offer the same opportunities? It could well do. Strap yourself in. It's going to be one great year as far as trading. I'm sure of that.